Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, September 28th, 2018. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss, and here is a look at the ES in the daily time frame. But before we start, I have a quick announcement. Please join me next Monday at 3:30 p.m. Central, so right after the market closes, and we will have our monthly market outlook for the month of October. This is a must-attend event here, as this October outlook can help with the rest of the year. We will be looking at candidates that can take us into the rest of the year, not just short-term candidates for the month, but these could be candidates that continue to take us into the rest of the year. And so this is going to be a pretty significant upcoming period here of time. We could see some significant volatility in October, especially given how narrow the pivot ranges are, as you can see here. And so again, we are going to host that event on Monday at 3:30 p.m. Central. It is the PivotBoss monthly market outlook for October. So please join me at that time. Now, if we take a look here at the ES, what you'll notice here is that price has pulled back from these highs here recently. A little bit of a pullback. You can also notice here the FOMC key level for September 26th is 29.27.5, and I have had some questions here about how do you calculate that level from various areas and various folks. And so I just wanted to mention that the way that I calculate that, it is the open price right at 1 o'clock p.m. Central, the open price right at that time when the FOMC announcement is made. So whatever time that is that corresponds to your time zone, it's the open price right when they release the FOMC statement and the Fed interest rate decision. And that in this case is 29.27.5. And here what you're looking for, initially price is going away from this level. Initially it's going away from it. Not significantly yet, but initially. Again, typically speaking, if price were to go away, it would continue until it finds rejection, and then it would come back to that level at a later date. So if we begin the month of October with some selling pressure, we could wait until we see rejection, which would probably be at the edge, in which case that would be a great opportunity to return it back to the previous close of the month and into the FOMC key level for a retest. So that is a potential opportunity that we have coming up. Another way that this could play out again would be where price just kind of takes it bid right out of the gate, and then the retest is also bid for this continuation. That's kind of within the framework of the current existing trend. But either way, this level is very important right now, and if we do get a move away from it, watch for signs of rejection to play it back toward that level as well. So there could be two trades in this move. But overall, what I am expecting is some sort of pullback or some sort of continuation of this pullback heading into the first week of October, followed by an opportunity to buy it back toward the September highs. So that's what we're looking for heading into October. We'll continue to watch this very closely. Obviously, the 29.17 to 29.20 zone continues to be a major pivot in the near-term time frame. Failing to hold above that zone suggests a bit more of a rotation downward. So we'll continue to watch this area very closely. All right, here's a look at the NQ. Now the NQ also has an FOMC key level that is testing right now. It's 7630.75. Now the NQ is significant here in that we had a rejection day here, or a semi kind of rejection day, and then price pushed through the tail and hit new highs right at the previous close. And then here we are already retesting prices below the midpoint of both of those sessions here. And that type of rejection, at least at the end of the month, end of the quarter, end of the week, could be signs that we see a little bit of weakness here heading into the new month of trading. And again, this is very reminiscent of what happened here just recently, kind of back here, where price was at a new high, formed a rejection tail, went through it the next day, but 2-3 days later, 4 days later, we were much lower. So again, the key level to watch here in that case is going to be the 7630 level. And right now we're right below that level and pushing below it for the first time here in the pre-market. And again, that's going to be a very important level here. Obviously 7600 is important as well. That's kind of the key zone, but near term 7630 is kind of the early level, and that's also the FOMC key level. It may trade around that zone. So we're kind of in a congested area right now. I think overall we've built enough energy within an uptrend to see a squeeze, but we may not see it here for a few days. The first couple of days of October could be a little bit of a pullback phase here, and then from there we may begin to see signs of strength. Even a violation of recent lows could still be a great buying opportunity in the LVN upon a trap and a reversal. So again, this market remains rather bullish. We are at some areas clearly where if market structure violations occur, yes, we could see a bigger correction, but that's been the case this entire move up, and we've continued to see strength. So overall, still expecting strength heading into the end of October, but do we start the beginning of October with a little bit of weakness first? So that's the idea here. Let's take a look at crude oil. Now crude has been holding at highs. I have just I've submitted to the bulls here. Obviously I've been bullish for a while here. I've been bullish for a bounce here. I've been bullish if we can get through here. The problem is it hasn't been extremely overtly bullish. It's been very, very hesitant, back and forth. Lots of intraday days where you're seeing moves just go back and forth, back and forth. So it hasn't been the cleanest move, but it has continued to find acceptance at higher and higher levels day over day. That is the epitome of a trending market in a bullish market to the upside. And so right now it's holding the 71s. Very narrow action right here today, only 25% of average daily range. It's been averaging $1.26 per day of range. Right now it has 35 ticks of range today, so very, very small day today. Tightly compressed action. I would say right now 71 is so very important that if we were to break down into that zone early next month, it could be a great opportunity to buy for a shot higher. Again, this hasn't been the cleanest market, so whatever you're able to get out of the first wave might be good enough to take, and each wave, each rotation could be an opportunity to defend into this pivot range for continuation higher. It appears we are headed back towards 75s. 71s right here is a good level to watch, and in that zone for a shot at eventually getting towards 75 by the end of October. So this could be a pretty significant wave higher, especially out of this narrow range here. Any failed break to the downside could be a big time springboard to higher prices. Alright, lastly, let's take a look at gold. Here's gold. Yesterday we got a break to the downside. We talked about watching 1190 for a confirmation of that break, and price pushed down through it and closed below it, and appears quite a bit more bearish. We talked about that before. We mentioned before that bulls have tried to keep prices bid many, many, many times and have failed over and over to get this thing to go up, and instead we've seen a breakdown and go each and every time. And I mentioned that if I had to commit to a direction, it'd be to the downside, that we would likely see a long liquidation with a push below 1190 and a continuation downward. A way to play that early in the day yesterday on a break, if you're a confirmed break, is I like to play a put right at or near that break level. 1200 was a good one for that one, and that one increased in value here throughout the rest of the day. That's a great way to engage something like that. Right now, any pullback into yesterday's midpoint, into the breakdown point, which is the 1194s, could be an opportunity to sell it. So we could bounce as high as 1194s here today. That would be 9 handles from where we currently are, and it could still be a selling opportunity. So right now, if price cannot reclaim acceptance back above 1194, 1195 early in October, because again, any bounce into this pivot range as high as 1200 could be a selling opportunity for a major continuation downward. So this one is very, very bearish right now unless it can reclaim acceptance back above that 1195 zone very quickly. Alright, that is it for now. Remember, Swing Trade Pro 2.0 has been released. Please go to pivotboss.com for details. Already getting great reviews just in the first day back, so I'm very excited about it. Please join me next Monday after the market for a PivotBoss monthly market outlook for the month of October. It is a must-attend event. Early volatility likely for October, and that's going to present some great opportunities, and we'll find them next Monday. So please join me Monday, and everyone have a fantastic weekend, and I will see you all in the trading room. Take care.